Mark, you hear me?
Yo, yo, yo.
What's up, Mark?
What's up, bro? Hold on. Let me just do this. Add this. Add my camera.
It seems like it's going back up, Euro.
Oh, is it? Okay, hold on. Oh, we're back, anyways. Wait, clap, 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 clap. Good job, everyone. Actually, I need to get my laptop. I need to get my iPad so I can actually see the chat. One second. Apologies for such a broken start. I have just got home. Yeah, so apologies. Anyways, let's go on to the chat if anyone's on there. If not, it's fine. That means I didn't miss anything. It's good. Enigma trading group. Hello to everyone who's watching.
Was
Elite man James. James is here. Good evening, Ray. How you doing? How's everyone doing? Sorry, I'm currently. I have food in front of me as well, so I'm gonna be eating that as well. I am starving.
It's okay. Bon appetit.
It dropped. It did drop. Yeah. So just finished work. Yep. Been working from 4 a.m. till 21 p.m. So from 4 till 9. I mean that's basic. I'm joking. That's insane, bro. You need to chill, man. I reckon you take a holiday to London. My trip got cancelled, so I I'll be heading up there again, so you can time it. Hey James, it's dropped. Lol. Yeah, it dropped. To be fair, as expected though, it did. 4.5 was forecasted, and it actually did happen. And obviously the fact that higher prices or lower interest rates was priced in for the markets. It should go up now. We'll see. We'll see, Elite Man. We'll see.
It should pick up. Like I was watching history, there was like two ways it's going. It's going instantly up, or it's going down and then go back to up.
Yes. You can see here. I was expecting sells as well for gold over here. Not because of this news per se, just mostly because I had technicals lined up. The fact if we broke this level right here, we have clean candles to the left to kind of take us all the way down. We did have minor support over here, but it looks like it's turning to quite a major support, which is quite unfortunate. This wasn't a live execution. I don't really get to go on the charts much, so it was just a prediction for me. As for euro dollar, so obviously I do expect it to still rally back up, just like gold, to be honest. I do expect more push to the upside for both euro dollar and gold, so we'll see what happens here. But yeah, but to be fair, this is a good entry for me, as I said, for a buy if it does start to climb back up, but we'll see. Oh, Bitcoin, which is quite weird over here. So if you guys remember all the way back when, I think it was like almost a month ago, I was anticipating Bitcoin to 18,400 because of untested areas over here. So we broke this level but never got to retest it, so I was anticipating that. Unfortunately, my bias switched slightly for some reason, even though the structure didn't change. Something in my brain basically told me to change shifts, but anyways, it was quite a stupid one, because this was a perfect buy opportunity in hindsight, obviously. But is what it is. You can see that we would have hit that 18,400 target. This may be due to the fact that Sam Bankman, SBF basically is now going to jail. So yeah, that's not good for him. Sorry, carry on, Elite Man. You were saying something.
It's okay.
Nah, talk, because I'm about to eat, bro. You need to talk, man.
Yeah. I hope it's going back up now. And probably if the power gonna speak, it's possible it's going up. It's like history is showing us. But no, it's like different time, so it's maybe it's going other way.
If anyone knows any Filipino dishes, I'm currently eating adobo. So yeah. Just to let you guys know. Anyways, a little bit insight into my life. Unfortunately, as I was saying though today, unfortunately my trip to London has been cancelled due to train strikes. I already made obviously the people aware ahead of time that there are train strikes happening today. So they knew and they weren't too shocked. It's getting rescheduled now, so hopefully I can still do the vlog and still see an investment bank happen in front of me and how they execute and stuff. It's gonna be around London to New York switch over as well, so I want to see how they actually interact with that time zone. But yeah. Did anyone even catch the moves? Did anyone catch these moves or not? No one was anticipating sales, were they? Yeah. So as for gold buys, it's not a bad buy at all. It's a little bit higher risk than my previous ones. So in terms of structure right now, what do we have? This is technical analysis. Obviously, our lows are still here, our highs are still here. Obviously, we printed new highs from previous over here. This isn't a retracement to me because there wasn't two consecutive bearish candles. It was basically bullish and bearish and a straight to bullish. I need basically two bearish candles to signify that, yeah, it is a retracement. So that one I'm still waiting on. I do anticipate higher highs, and I do anticipate price to go to 1870 at some point. By the end of this year potentially, or maybe early next year. And then if that price does hit, I am gonna see if we start to sell off over here, because if you look at the weekly, there is definitely liquidity being sat around this level over here. Although, as you can see in terms of if you look at the overall picture on gold, though, we are in a very major turning point over here. You can see that this was a major turning point for gold when we did break and then retest a massive push down. So we could anticipate a bit of the same over here for a continuation back down. Although obviously we'll wait for structure to shift first before taking those sells. Yeah, as I said though, around 1400, around that level. Dollar will still drop. You think so? I think so too, to be fair. So we'll see what happens with gold. And then, yeah, we are at a major turning point in terms of the buys anyways. You can see here that we had candle body rejection over here. We're starting to reject that level in the daily time frame. So maybe we look at the lower time frame to really look at potentially looking for the buys over here. As for 12-hour view app, nothing on the view app, but volume profile though. We did have a gap over here. You can see that it did try to retest it, but we didn't find any value. So for me, buyers are quite, quite risky at the moment. Mostly because no traders wanted to trade around this level. Meaning, for me, what it means is it's basically too high of a price. It's not at its fair value anymore. And we could start to look to go onto the next gap, which is this level right here. Which obviously will, if this gets broken, then we will have a new bearish structure. And obviously, as I said, we can start to look for the drop down to back to these levels. And again, back to these liquidity points over here. I will join on the trades. Oh, okay. I'm not happy. I don't know if I'm gonna have trades today. I'm just sharing my analysis for now. But you know, if you join the trades, you join the trades. If you lose though, don't blame me, huh? Yeah. Good.
We are always blaming you. You know, Mark. You know, always it's your fault.
Yes, of course. So as I said though, yeah, we are not finding value over here. You can see that we tried to find value. We found value above it, but we quickly went back into this gap right here. We're not printing any new values over here, and we're not finding any spikes. So again, that means there's no one trading around this level. Trading around this level and this level, but not in between this level. So we'll wait to see which direction it takes, whether it takes you know, the downside move or the upside move. So we'll have to wait and see. As for the view app, obviously, as I said, I normally put it on the daily leg, and you can see that this is potentially a good buying zone in terms of the view app indicator. You can see that we are currently at the upper deviation over here, which we could end up rejecting, which is good. It also kind of lines up with our daily level over here. The only issue I have currently, again, is the fact we're not printing any value. The moment we start to see some sort of value being printed over here and start to see, you know, a bit of spike over here, I'll be more than happy to take these buys, and I'll be more safe to take these buys. I know that these liquidity, a lot of people probably got triggered long over here as soon as this level got broken. A lot of people got triggered long, and we also have a lot of sellers over here in the lower time frame, which I'll show you guys, that probably got triggered in. Over here in the 4 hour, you can see a break of, sorry, on the hour, we have a break of the structure. Probably a lot of sellers got triggered in. You can see exactly where it went into where their stop loss could potentially be. So if you were thinking of selling, you're a typical retail trader, you would probably do something like this. Shorts over here and put your stop loss just above these market structures. I can imagine that this would probably take you out, or the majority of traders out anyways. So yeah, that's what I'm anticipating. We'll see, we'll wait and see. As of right now though, we'll wait for this basically. So obviously where we said this lines up right now with the value gap. So if we start to see some value printed over here, then I'll look to take the buys as well. And then this is obviously quite a big risk to reward, as we're anticipating a push up to 1870 here. Let's good luck on both. EU buys right now, man. Okay.
Yep.
You guys are ballsy, you know.
I'm still on.
You guys are ballsy. Why?
Well, need make money.
Yeah, I mean, yeah, if you don't risk anything, you won't make money, that's for sure.
Yep. James, what's gonna be your take profit?
Stop copying this trade.
Well, I'm already in. You're going to in, so.
Nah, be taught by James, and then you can take his trades. Got my chocolate milk as well. Chocolate milk makes the pain go away.
James, so join us.
James, join our stream, man, if you want. I mean, join the Zoom call if you want. But yeah, so again, as soon as we start, James and Elite Man are already on buys, but I'm waiting for these candles to be printed because this could easily get retraced all the way back down. Because you can see that all this right here is free traffic. Free candle, right? Not only is it free candle, obviously you can see straight away, but also the volume is also very low, so single print candles. So yeah, definitely waiting on this because this could easily just drop all the way over here, which I do not want. But as soon as we see some sort of value around here, then I know that traders are looking to get involved here, and I'll look to buy. It's not obviously a guarantee, nothing is, but hey Frederick, how you doing, man? Welcome. Just just gonna wait for the FOMC meeting as well, because that they're normally quite interesting, and well, they're better than UK ones. UK ones are very boring. Their meetings, their bloody talks. EU just sell, guys. Oh, he's going against you guys. Frederick's going against you, so.
Yeah, he's going. But now it should be go up now. Usually history is showing that it's going first down, then going back to up. It's probably going that way today too.
Hold on 1 second. Which mic am I using? Okay, we're good. Alright, I'm not using my headphone mic, because my headphone mic's way too close to my mouth, so you guys will be hear the chewing. That's not what I want. Unless you guys want some ASMR type with the chewing in the background, so. I'm just waiting. Yeah, same. I'm waiting for gold buys, to be honest. But again, I've explained it. I'm waiting for value to be printed first. On the lower time frame over here. We're starting to see some value, though. You can see. We're starting to see some value over here. Unfortunately, it does look like we are printing sell values. Hold on, let me see if I can remember. Up volume, yeah. It's still mostly up volume, but we are starting to see some sell volume too. So we'll see how that works out. Send the Zoom link. All right. If you want to join, yes, please. Now, you guys will have James. So obviously, direct all your questions to James, please. Don't read mine in James' chat because we talk about hacking. Oh, I'm joking. No, we don't. Anyways, there you go.
Well, I sent him already.
Oh, okay. Cool.
So
there you go.
Yep.
Unfortunately, we didn't have a stream this morning. Sorry. Oh, yeah. Unfortunately, we didn't have a stream this morning because Adeel wasn't feeling too well, and I was supposed to go to London, but trains were cancelled, so I didn't anyway, so it was a bit of a waste of time, but it is what it is. Happens.
Like I told you, probably the train there at the Stray Keys, so
Yep.
it's possible you can get there in the London.
Yeah, there were strikes. They did not even let me in the building.
Really?
Yeah.
Oh, shit.
Guys, I got places to be, money to make. They're like, nah. I was like, okay. Nah, I just saw them outside, and you know what? I get it though. Just be careful, guys.
I feel sorry to
We'll try.
to next time.
Yeah, we'll try not to get absolutely, our accounts to be blown, but.
So it seems like you going to up slowly?
Yes, gold is also going up, and we're seeing some more volume being printed. I'll wait for maybe 30 minutes to finish. Because right now, obviously, we had a massive breakout down to here. So I'm not too keen. Again, clean candle traffic till here, so again, not too keen to buy at the moment. Updating Zoom. Oh, come on, man. When was that? You never had a Zoom meeting? What's up? How come your Zoom's not updated? What's going on? What did you use? What did you use, man? Let's see here. How's everyone's week so far, by the way? I know it's only Wednesday. How's everyone's week so far? W's in the chat or L's in the chat? What's going on?
Pretty good for me.
As for me, amazing start, to be honest. Every single one of my trades have gone, except for crypto, which is Bitcoin. For some reason, I changed my bias. I don't know why I changed my bias, but I did. I was overall long for the past month or so, and these were my targets up here. Fortunately, I changed my bias to try. Oh, okay, we're not playing games today, but there you go. But unfortunately, I was looking for a sell at that point, which I don't know why, because structure was still bullish. Don't ask me. Again, I've been I'd still make mistakes from time to time. Anyways. Yeah, you can see gold is absolutely rallying now. This daily level, you can see how almost perfect that daily level was for a retrace. I don't mind really entering a little late on this trade. If I do end up entering, we'll see. Because FOMC, like, the meeting's going to come out as well in 10 minutes, so I don't know what they're going to say in the meeting. Yep. Maybe they're going to say, oh, you know what, we actually changed our mind. Next month we're changing interest rates again to whatever. And start to change the entire bias of the market. So right now I'm chilling. Some people trade news, some people don't. I am one of those that don't at the moment.
For a moment, it's good time to risk, make money or lose money.
Gamble.
Well, I'm happy other way.
Can you hear me?
Hello, James.
Yeah, we hear it.
All right, I can mute my mic. James will now take over. I'll be right back, guys.
Oh,
Yeah, same. You gotta take over now.
give me 5. I need to take a dump.
Why not
Okay.
before you come here?
While I'm eating, lovely stuff, James. Thank you very much.
It's so good.
Appreciate you, James.
You guys are making me stressed, bro. I need a shit.
Why are you stressing him? Don't stress James.
Again, I'm eating. Thank you. While drinking chocolate milk as well. Thank you, James. Yep. I'm not even joking as well, so... Now I've got the image
Deep
of
breaths.
James. Yum.
It seems like Morocco are gonna win football.
Morocco?
It seems like Morocco gonna win.
Who are they against? Are they playing right now?
France should be.
Yeah, go Morocco! Big ups Morocco. Yeah, I'm rooting for Morocco now.
Okay, my bad. It's France have 1 and Morocco is 0.
Okay, well, I'm still rooting for Morocco.
Yeah, same.
France already won last year. I mean, last World Cup. They don't need to win another one. They can wait.
Last time they did win already.
Yeah.
So, it's time to lose.
So what's your bias on EU?
Long. Up. I'm long overall.
If it goes short,
Mm-hmm.
I could expect it. I don't know. I can expect a shortcoming, but I don't expect a change in trend.
Mm-hmm.
But buy, dude. That's where I'm going. Long. Dollar's still gonna fall for a while, dude. They have to cushion those interest rates rising and the retailer market that's dropping as well.
Oh, good. As for me right now, I won't really see a break back down below until we reach that one. I think until we break 1.06100. At that point, we might see a bit of like a repeat on gold. So what's happening with gold at the moment? Obviously, it had a spike down, but I think overall it probably will still recover and start rallying, mostly because of the fundamental to the upside is quite strong, I would say.
Yeah, I mean, even if you look at that candle that's straight, right, with the big gap, that big candle,
this one right here.
that gap, that gap presents fair value. So price would have to pull back, respect that range to make fair value in that price before extension to the upside. That's why, on the same candle on EU, I could definitely expect that huge buy bullish candle price to meet fair value, meaning there's a shortcoming of sellers, but from once that fair value is made, I do expect an extension to the upside.
So
to meet previous highs at least. Yeah, it's same, like dude. It's same as your analysis.
Yeah, I'm thinking, I think, the thing is, it kind of matches up. Obviously, you use ICT and I use volume, which is quite interesting. That you kind of line up here.
Yeah,
it's very interesting.
Yeah, exactly.
By the way, you guys can share your screen whenever if you guys have something to discuss. Like, just be my guest. Just share your screen, and then if it's easier for you guys to explain that way.
Yeah, James, you're gonna show the screen.
Basically, share your screen right now, man. I'm trying to eat.
Bro, you are savage. You squeeze every opportunity out of me.
Yes, I do. I don't have a deal right now, man. I don't have it.
I'm in a trade. I'm in a trade now, so I might as well share it.
Go ahead. Guys, this is a James special. We have a special guest today. His name's James. Amazing trader. If you guys want to get taught, this is the man you need to go to.
Yeah, he's EU daddy.
He also he charges only £5,000 a lesson. Yeah. So it's a bargain.
Yes.
Can you please run IV cam? Thank you. It's saying please run IV cam.
Can you see, right?
Yeah, we can see.
Alright, I'm just gonna leave it open like that.
4 mics more.
Oh, here we go, guys. The pressure's on, James.
Bro, I'm not stressed out about this trade because if these lows are broken, let me just take this out, bro, to keep it clean. If we go to the 3-minute. So this is a swing high, right? I'm going to show you. So those 3 candles there is a swing high. So there's a higher candle there, lower candle to the left, and a lower candle to the right. So that determines my swing high.
Yep.
Then we have a swing low over here, which is a higher candle to the left and a higher candle to the right. So that's my swing low. So so this is why my stop loss is here.
Yeah, makes sense.
If I draw my line over here and this level is broken, then I know for sure that there's a break in market structure.
Yeah.
So then my confidence towards the downside on price meeting this fair value gap would be more likely for it to go down than going up. But if you see this swing high over here and market breaks this swing high, that would also determine a break in market structure. So my signal over here would be a candle with volume, not as big as this, but at least as big as this. You know, there must be volume in that candle.
Yeah.
If that candle with volume breaks this level and closes above, then I know for sure there's a break in market structure. So then I can look for entries within this area and I can catch the trade at its optimal entry.
Beautiful. I think we have the same idea of structure, to be honest. To some extent, I think mine's differs a little bit. But yeah, so as he was saying, basically, he's just waiting for a break. Well, if it breaks, obviously here, then he will be out of the position, which makes sense because there will be a break in market structure, and we can anticipate, as he said, previously the fair value gap to be filled, which is around these zones, and then around that point you can look for buys once more when that's filled. Obviously, if he does go up to his direction, we will anticipate, obviously since the swing high, we anticipate a higher high. So this is now the lower, lower high, sorry, higher low. The high, higher high, and then we're expecting another higher high over here. And then obviously in terms of market structure, that makes sense. We could anticipate at least potentially over here. Again, you can use a clean candle model if you really want to. But I don't think James uses a clean candle model, but yeah. There you go. No. You guys, take notes, guys. Take notes. This is gems. This is like gold. Well,
keep it simple.
It's
That's
EU.
The trick.
It's EU, but it's gold.
Simple.
Yeah, absolutely.
Yeah.
Look at this. He is now. We see a lot, by the way. Look at that. Oh, he's a big boy trader. He is. He's a big boy trader. None of these micro lots, bro.
I have to prepare for that FTMO, bro.
Yep.
I bought the account January. I'm gonna start.
Let's go.
I'm really anticipated to start right now, but
no. Let's wait till January.
Yeah. Wow, bro. This patience, bro.
You seem quite busy right now as well, so I think definitely take a break for a bit.
Boys, get ready. 10 seconds more.
10 seconds till Jerome Powell starts speaking. It's like as the moment he talks about inflation.
Do you have the link?
Sorry.
Do you have the link? Do you have the link to the stream?
No, do you want me to put it on though? I have it. I'm pretty sure it'll just be on the.
Oh,
link.
Please.
I'll try to put it on.
Please.
So it's Forex Factory, isn't it? I'm sure they'll have it on there. 1 second. You guys can watch it together. We'll discuss and stuff. FOMC conference. No. Federal Reserve. Surely it's gonna be here. If it's not on their website, then what the hell could it be, right?
Probably in website, yeah.
Is it this one?
Or
yeah, there they are. Hope we don't get copyright strike, but let's just hope we don't get copyright strike.
He hasn't started yet. Nice.
It's alright. We don't get money from these streams, so like we can't get a strike, surely.
Nah.
Well, everything is possible.
Don't say that. I don't want to get strike, man. I want Enigma to stay up, man,
Okay.
if that's possible. My boy.
Well, you know, I have right. I'm right.
Woo! My boy, let's go. Talk to us,
Yeah.
bro.
Good
Talk to us.
afternoon.
Yeah, EU going up. Oh, that's lovely.
Before I go into the details of today's meeting, I'd like
let me make
to
it slower.
underscore
Smaller.
for
Sorry.
the American people that we understand the hardship that high inflation is causing, and that we are strongly committed to bringing inflation back down to our 2% goal. Over the course of the year, we've taken forceful actions to tighten the stance of monetary policy. We've covered a lot of ground, and the full effects of our rapid tightening so far are yet to be felt. Even so, we have more work to do. Rock of our economy. Without price stability, the economy doesn't work for anyone. In particular, without price stability, we will not achieve a sustained period of strong labor market conditions that benefit all. Today, the FOMC raised our policy interest rate by a half percentage point. We continue to anticipate that ongoing increases will be appropriate in order to attain a stance of monetary policy that is sufficiently restrictive to return inflation to 2% over time.
Frederick, been a perfect week. Lovely.
Continuing the process of significantly reducing
Sorry, was
the
late
size
reply.
of our balance sheet. Restoring price stability will likely require maintaining a restrictive policy stance for some time. I'll have more to say about today's monetary policy actions after briefly reviewing economic developments. The U.S. economy has slowed significantly from last year's rapid pace. Although real GDP rose at a pace of 2.9% last quarter, it is roughly unchanged through the first 3 quarters of this year. Recent indicators point to modest growth of spending and production this quarter. Growth in consumer spending has slowed from last year's rapid pace, in part reflecting lower real disposable income and tighter financial conditions. Activity in the housing sector has weakened significantly, largely reflecting higher mortgage rates. Higher interest rates and slower output growth also appear to be weighing on business fixed investment. As shown in our summary of economic projections, the median projection for real GDP growth stands at just 0.5% this year and next, well below the median estimate of the longer-run normal growth rate. Despite the slowdown in growth, the labor market remains extremely tight, with the unemployment rate near a 50-year low, job vacancies still very high, and wage growth elevated. Job gains have been robust, with employment rising by an average of 272,000 jobs per month over the last 3 months. Although job vacancies have moved below their highs and the pace of job gains has slowed from earlier in the year, the labor market continues to be out of balance, with demand substantially exceeding the supply of available workers. The labor force participation rate is little changed since the beginning of the year. FOMC participants expect supply and demand conditions in the labor market to come into better balance over time, easing upward pressures on wages and prices. The median projection in the SEP for the unemployment rate rises to 4.6% at the end of next year. Inflation remains well above our longer-run goal of 2%. Over the 12 months ending in October, total PCE prices rose 6%. Excluding the volatile food and energy categories, core PCE prices rose 5%. In November, the 12-month change in the CPI was 7.1%, and the change in the core CPI was 6%. The inflation data received so far for October and November show a welcome reduction in the monthly pace of price increases. But it will take substantially more evidence to give confidence that inflation is on a sustained downward path. Price pressures remain evident across a broad range of goods and services. Russia's war against Ukraine has boosted prices for energy and food and has contributed to upward pressure on inflation. The median projection in the SEP for total PCE inflation is 5.6% this year and falls to 3.1% next year, 2.5% in 2024, and 2.1% in 2025. Participants continue to see risks to inflation as weighted to the upside. Despite elevated inflation, longer-term inflation expectations appear to remain well anchored, as reflected in a broad range of surveys of households, businesses, and forecasters, as well as measures from financial markets. But that is not grounds for complacency. The longer the current bout of high inflation continues, the greater the chance that expectations of higher inflation.
I wouldn't be so sure it's completely sell yet, mostly because the more this guy speaks, it'll just probably go like this. He'll say good things and bad things about the dollar,
and stable prices for the American.
You'll probably see some sort of thing.
My colleagues
You'll
and
just
I are acutely aware
we'll wait and see though.
that high inflation imposes significant hardship.
Higher time frame structure doesn't shift for me until
the higher costs of essentials like food, housing,
until we breach this level over here, this 4-hour structure over here.
We are highly
So I'd be very careful with just taking any positions realistically, but I wouldn't completely say it's completely sells yet.
Inflation to our 2% objective.
Yeah, dude. No.
At today's meeting, the committee
that was at
Be
Frederick.
broken.
At Fred.
by 0.5 percentage point,
Frederick.
bringing the target range to 4.25% to 4.5%. And we are continuing the process of significantly reducing the size of our balance sheet. With today's action, we have raised
Got a
interest
break of
rates by
structure, though?
4.25 percentage points this year. We continue to anticipate that ongoing increases in the target range for the federal funds rate will be appropriate
I'm trying to
in
time
order
this
to
trade.
retain a stance of monetary policy that is sufficiently restrictive to return inflation to 2% over time. Over the course of the year, financial conditions have tightened significantly in response to our policy actions. Financial conditions fluctuate in the short term in response to many factors, but it is important that over time they reflect the policy restraint that we're putting in place to return inflation to 2%. We are seeing the effects on demand in the most interest-sensitive sectors of the economy, such as housing. It will take time, however, for the full effects of monetary restraint to be realized, especially on inflation.
Classic break and retest over
In
here.
light of the cumulative tightening of monetary policy and the lags with which monetary policy affects economic activity and inflation, the committee decided to raise interest rates by 50 basis points today, a step down from the 75 basis point pace seen over the previous 4 meetings. Of course, 50 basis points is still a historically large increase, and we still have some ways to go. As shown in the SEP, the median projection for the appropriate level of the federal funds rate is 5.1% at the end of next year, a half percentage point higher than projected in September. The median projection is 4.1%.
You know what? On the dollar,
4 and 3.
we are entering buy-side liquidity. We have buy
still above
order
the median
blocks
estimate of its
on the
longer
dollar,
run
so
back.
I
Of course,
do
these projections
expect
do not represent a complete decision
strong
or plan,
buy-side liquidity
and
coming
no one
in.
knows with any certainty
So
where the economy will be a year or
our
more.
fair value gaps are likely to be met.
Our
So
decisions will depend on
we
the
are still in
totality of
high
incoming
seller
data and
position.
their implications
Yep.
for the outlook
I'm
for
very
economic
confident
activity
on
and
that.
inflation.
Yeah.
And we will
But
continue to make
this
our decisions
buy-side
meeting by
order
meeting
block
and communicate
concerns
our
me,
thinking as
so
clearly as possible.
um,
We're taking forceful steps to moderate
yeah,
demand so
I
that
can
it comes
expect
into
the
better
fair value
alignment
to
with
be met
supply.
over here. Like
Our
if you look at the
overarching
dollar
focus
over here,
is using
here's
our
my
tools
fair
to bring
value.
inflation
Yep,
back
I see
down
that.
So
to the 2%
price
goal
will either
and to keep
extend
longer-term
over
inflation
here, keeping that
expectations
gap.
from
And then on
Reducing
the
inflation
third
is
candle,
likely to
price
require
will
a
most
sustained
likely
period of below-trend
respect
growth
that gap.
and some
And then on the
softening.
fourth candle,
Start
we can
dropping,
see
yeah,
we
stop
should expect
Restoring price
yes.
stability
Yeah,
is
yeah,
essential
agreed.
for
It's a
achieving
good
maximum
shout.
employment and stable prices over the long run.
Because, I mean, we do have a clear break in market structure over here on EU.
Yeah,
I know it's the 1 minute,
yeah,
but this 1 minute makes a big difference.
Absolutely.
So
To conclude, we understand that our
price
actions
can
affect
extend,
communities, families,
meet our values over here, and then I can expect a higher fair value gap met on the daily time frame to be met before further extension, either next week or end of this week.
agreed. To be fair, same thing with me with gold. I'm not looking for buys yet for gold, but I am looking for overall buys and continuation.
Yeah,
So yeah,
exactly.
as you said, it's actually same here though. There is fair value gap over here. They could potentially get tapped into before rallying. So we'll wait and see. My first entry would probably be around here. If everything is right, if we find some sort of value. My first area will probably be here because it's the VWAP over here. However, obviously we still have all of this level that we could potentially tap into, so I just need to be wary of that. And in terms of macro scale as well, we're not bearish until we reach this level. So For me, I would probably end up like having potentially 2 positions at one point, and just have one below here. Overall, I do think gold will overall rally, but just how deep we're planning to go, I don't know. We're probably gonna tap out these people that look too long and are literally just lagging behind.
You going up?
So we'll wait and see.
Look at this.
Jesus.
Bro, sorry.
Don't worry about it, man. It happens. This is good. For this case, James was liquidity. Think about it.
Yeah.
Happens to the
So
best
it's
of us.
possible it's going up now?
As I said though, as I said, be careful with trading at the moment. It will literally just be up, down, up, down, up, down at the moment. Just because they'll say so many things, and then the market react with each of those things. That's the problem with these meetings. It's just like they can say anything at any point, and then these reporters will ask some random question you can't really think about it ahead of time, and then he'll answer it and be either good or bad.
But you know what actually occurs in these major extensions? It's not your typical retail traders, but it's your high frequency traders, bro.
Yeah.
Once that, you know, it's more like tape reading. You can see the positioning of buyers increasing, the sellers increasing. I used to do tape reading with stocks.
Yeah.
So they catch those milliseconds of positioning of contracts being placed, and then boom, bro. If they see that first break of long side positioning, they take it, they hold it 4 to 5 seconds move, and then they pull out. Then they see the sellers coming in, and it's just like that. They catch like a 4 or 5 pip trade, and then they die.
Yeah, high frequency traders, man. That really like. They are living over here, to be honest. They are living.
Yeah.
So they meet
Those
I used to
or
do that in stocks.
Those
like
people that do
retail
Brownian
strategy,
motion as
dude.
well. Those people.
The SEP, like you mentioned, the another 3/4 percentage points worth of rate increases.
Brownian motion people, right?
I wonder if you would foresee that being in 20 basis point increments, 50 basis point increments, sort of how you see this playing out going forward.
But you know,
You're looking at as you determine
why I'm also so strong on the buy side confidence, bro.
the
I mean,
heck?
look
What's
at
going on
this
now?
rejection.
boys, what's going on?
What's going on
What
right
the
now?
fuck?
So reporter asked, yo, what's up with the 25 basis points to 50 basis point historical rise? And they did, the dollar was like, oh, you know what? That's true. Reporter makes a point here. Started crashing the dollar again. No, realistically, it's just because of he's answering and stuff.
I think now that we're coming to
We'll see though. We'll see. This is crazy.
Oh yeah, yes, it's going up. I hope.
Jay, I think Elite Man's still in his buys at the moment.
not so important.
I'm still in buy.
You held all the way from here to here,
At a certain point,
Yep.
and you
I-
catch 10
Holy,
pips.
holy shit.
I would say
Oh, man.
question now is no longer this.
Okay, I'm out now.
Oh
I will see
no,
how much
James,
I
let's
make.
hope you're not
No,
liquidity,
man, How
bro.
high is your risk, dude?
Yeah,
How
how
high
high
is
is
your
your risk?
risk, idiot?
I was 0.31 pips
Okay.
in.
Okay. Where did you
But,
enter? Because it seems like you went up, like you were entered for quite a while there, which you normally are.
You
One
should
was
hold,
before the
man.
news, and 2 was middle in the news.
Oh, okay. I mean, to be fair,
So
with
I
news, you
should
know what? I
hold.
don't. To be fair, it's not so bad with news that you're closing straight away. But how long did you hold it for? Because that's your risk to reward, isn't it? How down?
Like
were you?
I told you, I gonna close. I was close all 3 my trades,
Oh,
so long
okay,
it was
okay.
open.
Oh, right.
Let's say 45 mics was one longest in what was their top.
Oh, okay. You had multiple positions going down. I'm guessing. And
Yeah,
then-
I was 3.
Okay,
Yeah.
that's risky at these news, but okay, you're brave like that.
No.
I'm glad that it worked out for you for
But-
today, but I'd be careful. though. Would have
But
warned
I was sure of the history. The history was showing it's going down and
Yeah.
coming back up.
Mm.
And there was second, it's going up only.
Yeah,
So
okay.
I was taking the risk. So
I am thinking of looking at buys over here. By the way, we are now rejecting this volume. We have created a volume cluster over here. I may be looking at getting entered around this level. Although what I don't want to see is this POC over here getting switched down here. If that happens, I'll definitely be out of my position straight away. Because that means that, okay, if you think of this POC, this point of control, as the fair price for gold, what traders deem to be fair price, if obviously the fair price of any commodity, any currency, or any asset, or anything in the, anything, maybe an iPhone, goes down, so what everyone is willing to pay for it goes down, then that means that price it means it's going bearish. So you really don't want that POC to go down into here. But as it stands right now, though, we are creating more and more interest around this level, so I'm more than happy to potentially execute around here. I'll wait for the candle close, though. If we reject this level, we could potentially stop filling in this level over here and start having a balanced volume profile, a balanced day, but I don't think we will do that. But we'll see. Bear in mind that we have broken structure over here. So obviously we were at consolidation, we broke below that consolidation, so just be aware of that. We might be going against the trend slightly on the lower time frame. But we have the higher time frame with us, with the 4-hour being the 4-hour leg being over here. So we are still very much bullish at the moment. And obviously we also rejected that daily level as well, which in, let's say, 15 minutes, we will end up closing, and we will end up rejecting this VWAP level, we will end up rejecting this daily level, and we're seeing some more value over here, we're filling in the gap, so at this point, it's quite a good buy. Again, just be a little bit careful due to news and volatility that comes along with it. But Elite Man, big W's for Elite Man, lovely stuff.
Thank you, everyone.
Smashed it.
Elite. I can tell you that you should be waiting for another entry on EU for sure.
Yep. I'm gonna wait.
As you said, which is we've got growth.
So I'm looking at
Well,
this
at least
major
I'm happy.
rejection. Yeah, dude, well done.
Yeah, absolutely smashed it. Elite Man's growing that account. He went from what, like $200 to 3K? He's about to make 3K to 300K easy by the end of the year. Tomorrow. Tomorrow.
That would be nice.
And then Elite Man's gonna.
You will be EU daddy.
Yes, you will be EU daddy.
No, I'm not gonna be EU daddy.
Left nutsack. The left nutsack of EU daddy. Nah, and then Elite Man will, take us to Estonia, give us a free plane ticket, first class, obviously. We don't fly anything less. Yeah. So we're waiting for Elite Man. You better get 300K by tomorrow. Although as you said, it's buys is still very much valid at the moment. So we'll see. If you look at the 5-minute structure point, so obviously we broke this structure over here, so this is with the leg, but we broke this low over here, so this is our higher low right now. We currently broke above it as well. So we're now in bullish territory for 5 minutes as well. So in the lower time frame we're bullish, on the higher time frame we're bullish, and on the daily we're bullish. And as for the weekly, actually I haven't seen a weekly in a while. As for the weekly, we're neutral. Although if you look at the previous 3 candles in the price action itself, we're also bullish on price action. So we have that going for us. So lovely stuff.
Appears to have been socialized at your last meeting, largely
Indeed.
before the past 2 CPR.
So we'll wait and see. As for the 12-hour, again, we're rejecting this big value, not big value, sorry, this big cluster right here. Unfortunately, it might be leaving me. Again, I like to wait for candle closes before I enter. I don't like entering just without candle closes.
I've called positioning on EU, so if you would like to enter now. I'm just calling it.
I haven't made a judgment.
Okay, I'm going back to him then.
He's back on buys, boys. He's back on buys.
Yeah, I'm back to my right.
So as for the 4-hour time frame over here, so we are rejecting. We have 2 VWAPs at the moment, but let me delete.
Don't slay trust.
Internet died. Are we back? I think we are. I think we're back. Okay, woo! That was close. I thought James was hacking me again, bro. I was like, he doesn't even want me to win. Bro, you're on the Zoom right now. You're still hacking me.
I was surprised he's gonna do that. Like I was sending picture, he was hacking, showing me.
He was trying to hack you. Yeah.
Yeah, he was dead.
As for
Wow.
the 4 hour, so as for the hour view app, we'll put it on this structure level over here. You can see we are just about, it's not perfect obviously, but we have just about rejected this zone over here in the view app. So again, looking for buys. As for good stop losses, I would say just put it just anywhere above these levels over here would be good. So if you don't want to have such a massive stop loss, risk it and wait for a pullback. And again, our take profit is massive, so I don't know why you don't moan about big stop losses, boys.
Yo, dude, you just need to apply appropriate risk management, dude. The lowest I risk is 1%.
Yes.
The highest I risk on my most confident trades is 4.5%.
That's
I do not
insane.
risk more than that. And the amount of trades I place in one trade is 1. If I feel I catch the trend very early, I would position myself at least, I call it the pyramid approach. So basically, if I drop 4.5% on the first entry, I would drop 1.5 on the second entry, maybe on a retracement. And then on the third entry, I would place 1%. So if I plan to scale out, I scale out by lowering my risk so that if price pulls back, I still have my 4.5% risk that's been placed on the first entry that covers those minor losses. And that's it, dude.
You can look at history, right? In history, with
money management.
In a situation like
Fuck you, go up now.
lines of deployment would be more meaningful, I think, than what you see written down there. But why do we think that is the case? So I'll give you.
You're too emotional, bro.
What's going on?
Is that wanna go up? That's the problem.
It's like the other day. Fuck you, Canadians. Oh, that me.
Yo, where are we selling EU to? Selling? Who?
Who's selling, buying?
Who? Nah, Marcus, now we're not selling. We're looking for buys right now, as it stands.
Yeah.
If it finishes above this level, it'd be beautiful. It'd be a liquidity grab of a lifetime. Oh yeah, where we sell? Oh, it's jokes. Sorry, man. I don't get the 55-year-old jokes anymore, man. I'm too young for them. Apologies, Marcus. Us young whippersnappers.
If we break the sell order blocks on EU, we can definitely see a major extent. So I'm aiming for these sell order blocks to be broken. If you don't know how to find an order block, Google that.
What do you mean, bro? What do you mean? You're here.
No, I'll show them. I'll show.
Yeah.
So we can see high buy order blocks being present.
Buys are good.
That's why when Marcus called earlier, he wanted to short. I told him be careful of buy side liquidity resting in this area. So you can see here, there's our buy order blocks. If we go to the daily time frame, you can see a major extension to the upside over here on this candle, leaving a gap, so we can see price break. That's why I was expecting a short like a retracement basically, to meet fair value over here, push to the extension.
I wanted to make
But
sure I understand
if we break these major sell order blocks on the daily time frame,
yeah, we're flying.
we would definitely expect major extensions on the upside of
We
the
have the same target. If you correlate it with gold, we have the same targets.
Is that primarily because
exactly.
So
if you look at Powell's speech as well, this is why when I listen to Powell, I always take my notes, and I'll show you why. So we have an inflation rate currently at 7.1% in the US, which is to be brought back down to 2%. Then we have a housing sector which is weakened, so mortgage rates have increased, meaning that impacts the dollar to go down. We have GDP at 0.5%. That's also a major inflection to the dollar. Employment rate, job gains slowed down, so that has a huge impact in the labor market. So meaning jobless rates are increasing, which meaning this will implicate the taxes as well.
And less consumer spending as well.
So exactly. So the dollar needs to be cushioned. That's what I'm saying. Unemployment increase as well. And if you take note on his first speech earlier that we watched, he specifically mentioned that they will be cushioning the dollar. The dollar won't be cushioned in a day or a week. But it's also important to take note that when you're in a pandemic, to recover from a pandemic, at least minimum takes 5 years. So you can expect downfalls for the dollar to occur in the next 2 to 5 years. So when the dollar falls, EU goes up.
Yeah. There you go. There's a fundamental outlook onto what the dollar's looking like for the rest. Well, as it stands, the month. And obviously, I think they basically summarized it year on year as well, as obviously the year is about to come into an end. I haven't quite listened enough that I should have, but yeah, Jane summed it up quite well there. Overall, the dollar is weak. Labor forces and unemployment's going up. Therefore, if unemployment's going up, there's going to be less consumer spending. If less consumer spending is less, then GDP will also take a hit, further decreasing GDP from 0.5 potentially even lower. So they have to find a way to potentially increase GDP somehow. Don't know how, because they're also going to be increasing interest rates as well, which further decreases GDP because there will be less investments from businesses and so on and so forth. But yeah, that's so far what I got from these fundamentals. But I'm no fundamental expert. I only did economics like for 2 years. So that's the limit.
But you're right.
That's the limit.
You said, you're right.
That's the limit I've got, man. I know the supply and demand curve. That's it. The S&D. Wait, that's the opposite. Oops. I know this. S&D, bro. Look at that, the equilibrium. You guys ever seen of that? Who's seen a trade at the economics, huh? Who's seen that? No one. But as it stands right now, we have a minute till hour finishes. I'll be looking to enter this again. A lot of compliments lining up for buys for both EU and gold. I'm mostly looking at gold at the moment, but I can imagine EU is probably looking the same. I trust James' analysis, and he's looking for EU buys. And we're basically, in the same level, if not, just, what I'm saying. I'm a little bit under. No, I'm joking. So overall, yeah, we're both looking at buys and basically weakness for the dollar as a whole, fundamentally and technically. So we'll see. If you guys lose, my bad. Might be, bro. Might be. Blame Elite Man for it.
Well,
he took your money. He was the one who made the money today. So
yeah, I did take.
Yeah. What a nice level for buys. Absolutely. Nah, I'm waiting for a retracement though, to be honest with me. For I don't like buying it at the highest. I always want a bit of a discount. I'm a bit of a cheapskate, I'm Asian at the end of the day. I like a bargain. That's how it works.
So technically speaking, you are smarter.
A smarter money than the yes, the smarter money out of the dumb money, exactly. Nah, I like me a bargain and a half. So I'll wait for a pullback first.
Tomorrow is
Sorry, what was that?
Tomorrow is more news. So.
Oh, is it? Okay.
Yep.
So I'll wait for a pullback here and then I'll look to execute. As long as we, let's see. So we finished above these levels, rejected the zone, a major wick as well. The only problem I have is obviously we're probably going to have liquidity sitting below here because we probably entice a lot of buyers to buy at the moment. But I can't completely disregard, every single, if I just keep thinking like that, I won't have a position ever. So I need to take some risk sometime. We are now above, by the way, the VWAP itself. We also just about miss the VWAP. James EU Daddy. No. Today it's Elite Man. I don't know what you guys are talking about. Today it's Elite Man. Elite Man's been promoted to EU Daddy.
No, I'm not.
He's taking James's spot. James, you gonna allow that?
James teach us.
James, you gonna
James
allow
teach
that?
us.
No, you're you, daddy.
Yeah, James.
I'm little small boy still learning from him.
New housing leases show declining inflation.
Yeah, no, EU Daddy is an elite man today. But we'll see how he does for the rest of the week, though. Only for the he can easily get beat left nutsack again if he if he messes up. You guys don't get it. It's because you're not in the Discord. Join the Discord, guys. If you don't get those jokes inside jokes, join the Discord. It's a lot of fun. It's a lot of banter.
Like
We also take a lot of trades.
Myself.
Serious traders. You're out. You out yourself. Hold on, let's see. Let's see.
No,
Okay, I was gonna say.
Oh.
He's holding. Elite man's missing out on these dollar P's. I can't lie. I am looking for 1.0.
Well, I'm already.
1.065.
I'm already profit, so it's okay for me.
Oh, that's why I hear you.
I haven't even traded today.
Scared money. That's what elite man is. 0.65. Is it because it's around 50% retracement? 0.4. 1.046. Wow, you are waiting for it to drop, huh?
Michael McKee from Bloomberg Radio and Television. There's a little bit of
I don't know if that was a typo.
While you wait for it to drop, I'll take the buys.
That is a big drop, Marcus. Okay, I was gonna be bro, I'm waiting over here like we're waiting for a while here, bro.
Or if you feel
I rate the idea though, Mark. Nah, okay, 1.6.
Check raise that
1.0644.
the recent disinflation we're seeing is transitory.
Around these sorts of levels then. Lovely. I think he just about got it though, from what I can see. Let's get gold right now. Gold is rallying, not bad. Look at the hour though. Look at the 5 minute actually. Where's the next structure that it makes sense to go? To be fair, it makes sense to buy around this level for gold for me, so I'll wait. We'll get that retracement. We will. We'll tap these early buyers out, James. Nah, I'm joking.
Oh yeah.
We're not on gold.
Oh yeah.
I'm on gold.
You can definitely expect, if you were to draw back, I would definitely see it pull back to 6311.
Okay.
Definitely. So it will pull back to what's that, 644. But if you would like to position lower, I would definitely not convince you, but motivate you to enter the levels at 6311.
He encourages you to do that. An encouragement. I would But yeah, as for me anyways, I'm looking for 1802 for gold buys right now. 1802. I'm a risk taker. You are. I think we've all seen that, Marcus.
but I have a but to my sentence as well.
Okay, let's see it.
If Marcus, if my sell order block breaks, you're gonna wait for a while.
Yeah.
So I'm gonna ride it up, and then you can catch it back down. Yo, if this is broken, bro, you can aim at levels.
Yeah, you can aim high.
I'm not joking. I would put $1,000 in front of my mouth. If that level's broken that it's shown, you can definitely see it tapping out at 7475.
I would say around here.
Then you can expect your short all the way to the downside of fair value gap. Yeah, at the ease level, this level here. So,
I am inclined to agree. I agree. Again, you can see my targets for for oil.
Let me draw it. So it will go like this, consolidate, and then it will pull back, and then if these buy levels are broken down here, then we can see further extension to meet other buy side order blocks. But if these levels aren't broken down here, we can definitely see a further strong side, either creating a double top, going back to test these levels, but if it fails again to break these levels over here, then we can see extension to the upside, reaching levels at least not this. The reason why I'm not saying this is because there's no strong swing high created in this area. Therefore, you can determine that. Just hold on. Therefore, you can determine that these are only retracement levels. So there are weak lows and weak highs over here. If there are weak lows and weak highs over here, then you can definitely expect further expansion to stronger highs. So then you would aim for levels at least to 1.1 if these sell orders are blocked, broken, basically.
Lovely stuff. It's amazing, amazing, amazing. That is amazing guessing. I'm joking. As for me, so you can see here are the daily over here. Basically, like James, once these structure levels over here on the weekly is broken, I do anticipate these major highs to be tapped once more, 1872, and that's what I'm targeting for now. I'm not gonna go too in depth on it. Basically the same as James, just without the order blocks.
Yeah.
I'm just copying James' analysis and just putting into gold. Don't mind me, guys. Don't mind me. Make a profit of this.
It's okay. It's okay.
No, there are reasons. I promise there are reasons. Not good ones, but there are reasons. I swear I'm a good trader. I swear I'm a good trader, guys. I promise. I promise I'm actually good at trading. I know it doesn't seem like it. I don't like it when I'm on the one zone.
Trader, dude.
I am a swing trader.
I'm
looking at lower and lower time frames nowadays though, just to see if I can potentially do intraday at the same time. I think it'll benefit me a lot.
But I will convince you, bro. Let me show you a few tricks with intraday trading, and I will convince you to do intraday trading.
I'm looking at it already. Don't worry, I'm looking at it already. But yeah, please do convince me. I'm more than happy. I won't be doing ICT though.
I will have
by
to...
the way, I will never do ICT. I'll tell you that now. And never ever do ICT ever.
But I'm gonna wiggle ICT concepts into your brain with.
I can see them. You will see sometimes.
Holy shit! This is working.
You can see that sometimes I do use order blocks as confirmations, but very rarely.
So look over here. Market structure break with volume. There we go. So my prediction on buy side levels is confirmed. So I'm holding now.
Again, this one needs to be broken. If this gets rejected, I mean it doesn't mean it can't go back up again. But I would say it's just, you know, I would say for anyone that's holding,
it will come back. It will definitely come back to broken market structure. And then it will expand. So if that second move does not expand, then yeah, we can see it coming back to the buy side order blocks and then doing the expansion. But the only confirmation I'm looking for is a break of market structure with volume, meaning imbalance over here. So we do have an imbalance, but if this candle over here leaves that gap open for me over here, let me draw that out. Then I am highly confident that our order block will be broken. So if that candle closes just as it is, not closing this gap, we can see a retracement over here, and then we shoot to the other side.
That's what I'm thinking. That's what I'm thinking with your thing.
Yes.
I would probably, to be fair, if that's the case, wouldn't you want to look for scaling around this level though? Wouldn't you want to like...
No, not yet. The reason why is, if it's gonna break, right, it's gonna break with imbalance. So meaning it's gonna break with a candle like this.
Yeah.
A big candle like this, right? So when it breaks with a big candle like this, I can determine my fair value gap, which is from this candle over here to the left and this candle here to the right. This is what I explained to Elite the other day. If you want to catch optimal entries, like I mean really optimal entries, if you find a strong candle move that breaks a certain structure in price, right, then, and if it leaves a gap between the candle on the left and the candle on the right, I'm going to draw out the gap, this gap over here. So from below of this wick to the low to the high of this wick, I draw out my gap. So that's my gap. If I'm able to determine that gap, I can start setting my buy limits over here. because this gap tells me, this is why this gap is so important. This gap means imbalance. Imbalance only occurs when there are strong moves, right? So this gap between there tells us in price action that price needs to come back to make fair value in this area before starting the expansion. If you think, yeah, you're lucky to see the pattern now, I would highly challenge you to go through your charts and look for this pattern. So over here, we have a break of market structure over here. So there's our previous low. We draw our price broke market structure with imbalance. Exactly.
Yeah.
So if I draw then from the wick to the left and the wick to the right, and I do that, then I know for sure. So the best place to place your entries would always be from closest to where the price is moving. So basically, I wouldn't place my sell limit over here, but I would rather place it over here.
Okay.
Price will move. Price does tend to move a bit outside the fair value gap. Yes, that is meant to scare you, but remember the meaning behind the fair value gap is where price needs to come back to make fair value before a trend occurs.
Okay.
So now we can see price came back, tested fair value. Now when fair value is tested, normally it is tested once. It's either it will come back for a second time or a third time. The only reason I'm saying this is because you have 3 opportunities to take an entry. So we can see price came back, tested fair value gap. So I could have placed my sell limit here, and I could have let it ride, and determine my targets over here at the bar order blocks. So over here, same thing. I mentioned that, okay, price will come back, make fair value over here, and then we could expect further expansion. Over here, price created fair value over here, came back, made fair value, I placed my entry and I took the trade. Now, if I'm looking to, I could have taken a trade over here. If this candle closes and it leaves me a gap over there, I could start scaling out again.
That's what I mean. Hold on, sorry.
Yeah, go ahead.
So do you mind, so let's say we have obviously a candle over here. If price does end up testing this fair value gap, this is my question. Would you end up looking to enter around this level, or would you just leave your entry here? Or would you look to scale in? Because obviously at that point, I mean, do we end up not
basically there?
Yeah.
So if I were, okay, I've determined my fair value gap. So if I want to determine the best possible entry, then, okay, so here's one coming. I'll show you.
Yeah, okay. Yeah, I see.
It turns out, okay.
Yeah,
okay.
I see it.
So now it goes back. I'm getting ready to take an entry. I can place it now, which is fine.
Those are forecasts for slow growth.
Then my stop loss would be, so my stop, if price moves below this, it's fine.
Yeah.
I do expect that. It happens sometimes. But my stop loss would be at this range over here, at least 5 pips away from the previous.
Got you. That's good. That's good. You can see how perfect that is, by the way, guys. This is a good example of it. Look how perfect that rejection is at the moment. Obviously, as it stands right now, it's a perfect rejection. We'll see, obviously, how it ends. But look at that. Wick to wick. Perfect rejection to the upside. Obviously, it won't always be like that, but it just shows like this type of concept really does work. It's just me being against it personally. Nothing against the concept itself. I just don't like it myself. But as well, another question is, would you not move your stop loss to just around this level as well? Just below it? Would you not want to?
Would.
Yeah,
I would.
I thought so.
If I would, okay, just remember this trade that's happening now is not even 1% of the account, so I'm happy to hold this move. Okay,
Yeah.
just take note of that.
What? Which one? This
Okay,
one?
so-
Or this one?
Both trades from this level. I'll show you why. So if I determine my stop losses, I would normally determine that. Okay, remember when I do my, if I determine a bias, right? Or I always start my day by, okay, what's the bias of the day? intraday. I'm talking about intraday. So are we going to go up or are we going to go down?
Right.
So I use my daily and my hour time frames to determine that. My 15-minute is where my framework is. So when I mean my framework is where I can determine my target levels and I can determine my stop loss levels.
Right.
So initially, with a 4.5% risk trade, I could at least take a stop loss level down here with an entry level around about this area over here.
That's a swing almost, that is.
And then, yes, but due to the major liquidity grab, it's kind of forcing us to run a big stop loss.
Yes, that exactly the same with mine, yeah.
Technically speaking, my stop losses aren't always this big. It's about 30 pips, to be honest.
Yeah.
So, and then, you know, I would aim for levels to go to the hourly. Then I would aim for my levels.
Yeah, which is the higher time frame ones. I'm guessing around here.
Yeah.
And here.
No, actually over here.
Yeah.
Over here, because we have sell order. Yes, over there as well. But if it's there, I need this sell order
to be
blocks
broken.
to be broken. Yeah.
That's what I do. Yeah.
My intraday target, due to the high news and everything, would be these levels. Once these levels are taken, it won't be taken in one shot. There will be a rejection, meeting back at the fair value gap down here before further extension. Then I can start aiming for levels over here.
Got you.
So.
Whoa! Did they finish it? Did they end it? Yeah, they ended it. Hold on. Okay. So let's see the results then. So as for gold right now, we did get a push to the upside. Let me see if we actually got a rejection over here where I wanted it to. Look at the 5 minute. So as for the 5 minute right now, I'm waiting for a bit of a pullback down to these levels over here. But we'll wait and see. Let's look at euro dollar. Actually, James could actually talk about euro dollar. It's actually better. Let's see what's going on right now. Off to James. So as you can see, as you can currently hear, okay, so what happened for me anyways, what I can see, cancel. I don't wanna actually request remote control. I can do this. Go into James' computer. No, I'm joking. I don't need it.
Do you joking there?
No, I don't
Mark?
need it. Give up control. I don't need it. It could be dangerous, boys. I don't want to be leaking information. Nah. Good night, man. Good night.
What we gonna do now?
Have a beautiful evening. So yeah, as he's well, basically my questions was, what about here? Obviously we had a breaker structure over here. We've left it in balance. What do you think happened, and how can you prevent this potentially getting blown, blown out straight away?
I'll show you why.
I'm guessing VIX. Let's see, or Dixie.
No, I'm gonna get a clean shot so I can show you. Let's do that. You said potentially these areas.
Good night, Marcus.
To avoid them, right?
Sorry. Yes, I think Marcus out.
Okay. Okay, so let me show you. Let's work a top-down analysis, then I can show you. Okay, so my buyers. Okay, it's bullish.
Yes, clearly higher highs.
Too many times
away,
to people. Yeah, it's look at all these things.
Yeah.
Okay, so if you look at the hourly, right?
Yeah.
So let me tell you, I'm going to show you how to avoid them, but there needs to be a supported foundation to why we would expect to move like this. So,
right, okay.
This is why I need to explain this first. So if you look at the hourly time frame,
right,
look at this major imbalance, right?
Yeah.
Fair value gap. If we look a bit to the left,
we had a major structure break.
The previous high made.
Yeah.
Major structure break.
Yeah, structure break.
This legit follows my entire system on taking an entry.
Yes.
So, okay, so we've determined that. Now let's go into lower time frames into this area over here.
This is, I'm starting to get it actually. Before you even explain it, I'm starting to get this now.
That's good, Mark.
So here we can see relative equal highs
Yeah.
and
Relative
relative
equal
equal
lows.
lows.
Yeah.
Yes. Then, okay, so what price action tends to do is, it normally occurs to play with the retailer's mindset, but it's a very, very common occurrence.
I would agree, yes. Yes.
So when price creates relative equal highs, the most recent relative equal highs, it pulls back down. We could, due to me supporting a upside move and expecting price to retest at this value due to the significant imbalance, so price needs to come back and make fair value. My expectation is that, listen, I'm expecting a short coming in, right? So what a very common step, I call it a two-step. So when price creates its new relative highs, obviously it needs to pull back. But what we often think of that, okay, it's going to also create relative equal lows, okay? So what price action tends to do is it will extend that move, giving false hope to retailers. So basically what it's doing here is it's grabbing sell side liquidity. So by, for example, if I were selling, okay, I see, oh shit, major support has been broken. I'm gonna take this trade. So then they would set their stop losses like this, and then they would aim for new lower lows. So now what price action, and look how, this is why I said that price action is so precise. Sometimes you don't see that very often in Forex, but if you're a futures trader, you would see how precise price action really is. For example, one time I had a stop loss, but I knew the stop loss was going to hit at a certain level, but I only pushed it a bit higher with 2 pips due to the precision of price moves. That price action went back to that level, created a relative high, away 2 pips away from a stop loss. So meaning the precision in price is very algorithmic.
Yep.
It's not, we discussed this about on the Discord. Back in the day, it was very different, but
right
it's
now,
very,
yeah,
very algorithmic.
I would agree with you. I think it's very algorithmic,
So,
not random.
precision and exactly. So price, when price makes a move, there's a reason behind that move.
Mm-hmm.
Okay, so it created relative highs. We are expecting a relative low to be made, and a further upside extension. But we can see price breaking these levels, right? And then grabbing sell side liquidity and then pulling back up. But how do I know for sure that price will not go down further, right? So this is a rule that you need to keep to yourself mentally. And trust me, it always works. It's one of the main rules before I take any entry or any exit or whatsoever.
Yeah.
So when you set your recent low, okay, over here, if I'm going to go in a sell, my first rule is if price breaks that level needs to be broken with imbalance. And when I say imbalance, it needs to be a big move. Not like this. It can be this big. It can be this big. But there needs to be volume in that move.
Mm-hmm.
If there's no volume in that move, but it breaks that structure, then I know, okay, this does not suit my entry to take a sell. Therefore, I'm confident that this would be a sell liquidity grab before taking upside moves.
Mm-hmm.
Trust me. So if we go a bit back, we saw a bit forward. We created our recent high. You can see price went back, created a relative high. If I set my lows over here, you can see there's a lot of relative lows in this area.
Yeah.
But how do I know that price is not going to break through? It did not break this level with imbalance. So if it's not broken with imbalance, then it's a fake. Then it's a liquidity grab. And look at this
Right.
rejection over here.
That's
Look at
something.
this is why remember how precise price action is. So 1 week can tell you everything. And look at this major rejection over here. Yes, we had rejection on buy side orders as well and sell side orders, but that is if we go into lower time frames, look at that. It's a relative equal high and a relative equal low. Price broke with imbalance. Yes, this is a perfect fake out. Sometimes you get caught up in moves like this, but it's okay. It broke with imbalance, so I'm starting to. Earlier over here, I was setting sell orders because this followed my positioning.
Yes.
But it was a risk, and also the reason why I took a sell order is because, I was definitely expecting price to meet fair value over here. So that's why I bet on a 50% entry level.
Right. Okay.
But then we can see price recovered. It pulled back. It recovered again, creating a relative high, and then we can see a market structure being broken. Okay, so there's not a market structure break over here with perfect imbalance, but we can still see that on the higher time frames. So if we go on the 1 hour, give me a second. Yeah, this move is more enough to what I need. Imbalance, a break of imbalance. And yes, I expect price to pull back down where market structure has been broken at this level over here. So yes, price always pulls back to broken market structure. The reason why is, remember when I showed you fair value gaps where you can catch your entries? Price will always move back to that fair value and you can set your orders and price will do further expansion, right? Now remember, when market structure, this is where the second rule comes in before taking a trade. Let me show you. One, market structure needs to be broken with imbalance. Second, when market structure is broken with imbalance, a fair value gap should be formed. It kind of makes sense if you think about it. If market structure is broken with imbalance, a fair value gap should be formed. Once those two rules align, then that kind of takes my confidence from 50% to 75%.
Okay.
So if those two rules are met, then I could take this trade. So
Got you.
It kind of makes sense. So it kind of makes sense to why I'm confident that these moves will not be going down. It's due to low break of imbalance,
right?
Major rejection in sellers. That's it.
Well, would you not say this is an imbalance form? If you just zoom in into this area over here, if you wouldn't mind. Again, it's just questions because I have obviously, I would like to ask ICT himself, but he's kind of busy. He doesn't have time for me at the moment. The 15-minute was fine, to be fair. The 15-minute was fine if you just mind zooming into that zone, because I saw a bit of a fair value, obviously, of this market structure, right? So this basically, this is what I'm looking at the moment. We had a break. However, as you said, there wasn't.
You can take that trade.
No, sorry. Yeah, we had this break, but we had as you said, a thing over here. We had a fair value gap formed, but it wasn't this. Obviously, this does not count as a fair value gap because we didn't break.
So remember the two steps that I told you about?
Break with imbalance.
So yes, and then market structure. So remember, So when market structure is broken, there should be a form of imbalance.
Okay.
Okay, so those are the two rules
Yeah.
combined. So remember, this is still a swing low, a higher candle to the left and a higher candle to the right. So there's our swing, right?
Yeah.
So it's fair enough to put our level of market structure over here.
Right.
So if we go back to the 5-minute, we can see market structure has been broken with imbalance over here.
Absolutely, yeah.
So our entry won't necessarily be over here, but our entry would be in this fair value gap over here.
Yeah, I thought so.
Which you can already buy tau, but price went back, tested it, so you could have placed this, sell limit over here, take a bit of a drawdown, and then you can catch your target at, the lowest.
Well, the equal lows were here, yeah. So, probably would have been that first. Would you wait for sorry, for these ones right here? Does it need to be a certain type of candle formation, or like does it have to just be with no volume? What are you anticipating for this pullback over here into fair value gap? These ones right here. So trying to go back into fair value, right? As we try and go back to fair value, are you anticipating slower volume, or it doesn't matter? What kind of?
No, it doesn't matter.
Okay.
Keep it simple. Trust me, keep it simple.
Okay.
There are times where price would really throw big moves over here, but remember our stop loss would be at least 5 pips above the recent high over here.
Oh, okay, that's different.
So our entry would be in this area.
Yeah.
Around about this area over here. Trust me, if you follow your rule sets, the chances of getting a stop loss hit it's low.
Yeah.
Trust me, there needs to be a major fake out to really hit that stop loss. So technically to this move, there are moments where price will come with one candle and smash with one move to the upside, and this is where I always say that if the fair value gap is broken a bit higher, it's normal. It's meant to scare you. That's the point of it. So you get big candle moves in this area where it will formate a major wick, or it will keep that move over there.
Right. Okay.
But it can be a very big volume move, but normally when it's a big volume move, there's major rejection. So that's very, very normal.
Okay.
Sometimes it's a very low liquidity move, so maybe it's a very classical retracement, big candle over here. So it can be a slow move, it can be a very strong move, but at the end of the day, if you follow those two rules, neither with your expectations, there are conditions where it will break higher to these levels, but you'll be safe, trust me. If the stop loss is hit,
that's fine, move on to the next one.
Shot.
Yeah, move on to the next one.
Exactly.
Yeah.
Take your shot. There's a reason why you have risk management in place.
Absolutely.
But the times where the stop loss is hit, it's very unlikely.
The thing is, there are some traders, some smart money traders that put their stop loss just above this candle. What do you think of that?
That's stupid.
You think so?
It's very stupid. Because, very, very stupid. Because, when a time comes where price respects this level, but it comes with a strong move and leaves a big wick, they are knocked out just on that one move, but I'm still able to obtain an optimal entry, taking full profit. So they would have to find another. If you get stopped out and you set your stop loss at that level, and you're looking for a new entry, that's where you start to gamble your trade.
Oh, you got it. Yeah.
So
makes sense. I know a few traders that do that. I've seen them few, and I was like, that's fine, because I feel like this is why the smart money is seen as a new retail, because these people are looking to be greedy, right? They want their stop loss to be as small as possible, so they can catch those big moves. You can see them getting tapped out every single time.
And you know what's the first thing that comes to my mind when someone says they are running very, very tight stop losses? It tells me that the person is running a very high risk management trade.
Yes, agreed, yeah.
So he can't afford to handle that trade. So that's why it's very important. Look, on one trade, bro, I risk 4.5%. If it's a very good, I aim normally for 1-to-2 ratio or 1-to-3 ratio.
Yeah.
The majority of my good trades is normally 1-to-3 or above.
Yeah.
But on a 4.5 risk percent trade, I make above 8.5% in return.
With a higher win rate as well,
But
rather than doing this.
exactly.
Yeah, agreed.
You need to be able. That's why if you know you have good risk management in place, taking a stop loss, it's nothing. It means nothing to you.
Yeah.
So because you know your returns are 2 times as big or 3 times as big. I do not trade 1-to-1 ratio. I don't.
I don't
That's
like
just
that.
for me a gambling mindset.
I don't like it either. It's basically saying that you have no edge because of 50-50 chance you make or lose. I don't like the idea of the 1-to-1.
Exactly.
I
Yeah.
don't like it.
You're playing roulette.
Yes, exactly.
You're playing roulette.
Exactly. If you don't have an edge to get you to at least 2% of your risk, then why are you trading to begin with? I feel like it's not trading again. It's gambling. I 100% agree. My average risk to reward, as it stands currently, around 3.3% per trade.
Oh, that's perfect.
So it's pretty good. Obviously, I am more of a swing trader, so it does take a long time
is.
before I get them and stuff. So yeah, I like these types of thing though. I'm still obviously not good. By the way, I do always keep these things in mind. I always look at price action. It may not be exactly how smart money looks at price action, but I always like to see price action and what the market is doing. Obviously, I have a better view of how price action moves now, which is great. Subconsciously, I'm sure I'm going to be using this.
And dude, and the thing is, bro, price action is so important.
I think
you should always it tells a story. If you can figure out the plot of the story,
that's exactly what I say.
You are always on the right side of the market.
That's exactly what I say. That's exactly how I say it, and that's exactly how I say price action. I describe price action. Price action is basically the story of the market. If you're able to read it, with what's it called? With fluency, you're unstoppable. The same thing with structure. I believe structure is also for me. Structure paints a picture in the market and what the market could potentially do. Structure is a big part of my trading myself, and obviously the volume indicator, the VWAP, and stuff like that. Also a big part for me. I think liquidity. Obviously, I have a new take on liquidity now, as you said. So liquidity grab would be anything that doesn't form an imbalance. That's more likely to be a liquidity grab than not. So I think that that for me obviously changed, because for me liquidity grab would basically be as simple as we have consolidation, and anything below, anything break below and finish back above, for me that would be a liquidity grab. Which, to be fair, I think it's still valid to see liquidity grab in that sort of way. If we finish back up above, as long as we don't finish back into a fair value gap, I think, or a fair value gap doesn't form here. I think it's still quite a valid way to look at it.
I mean, if you look at, if you keep your drawing, all these relative highs and relative lows are liquidity grabs. So if your relative highs and relative lows are this frequent, then we by instantly know, oh, we're in a consolidation.
Yeah, exactly. Yeah,
but if you think about it fundamentally, if you think of it as a fundamental standpoint, we are busy positioning, the market is positioning itself.
Yeah.
So contracts are being filled, contracts are being positioned. Therefore, yes, we do have the tendency where institutional traders would grab retail traders' liquidity levels over here, giving them a fake out move, and then they would, start taking their expansion. So, but this is also where discount and premium and equilibrium comes in, because if you would also be able to determine whether price is in a premium level or discount level, that also tells you a whole different another level of understanding market structure, because what price normally tends to do is it's very, very, very common. So if we are in an uptrend, price would be in premium, right? So what price action would do is it will reach new higher levels of premium. Once institutional traders have obtained those new levels of premium, then price will come back down, the trades pull back down to lower lows over here, and then it will take a new discounted level in market, and then it will take to new premium levels. So that's why you have to think of price action as a story, because these patterns are very, very common. Very.
Lee, man, are you learning anything here? Because I sure am. I sure am. This is good stuff.
learning.
This is good stuff. But this is also shows, by the way,
know.
like how different trading. Obviously, your trading is obviously fine, and to be honest, I rate how you traded thus far, and it's completely unchanged. I mean, it shows that you had consistency in your strategy, and it shows that you have full trust in your strategy. Although this type of thing, though, it's beautiful though. This type of thing is very mechanical. Right, there's no maybe what ifs or anything, so it gives you confidence to actually take the trade and hold the trades. But yeah, that's it. I don't know what this level is. I think it's a previous market structure, maybe an imbalance. I'm not too sure. I can't remember what this is. But you can see how perfectly it retested its previous structures and start to go back up again though. It's crazy. It's crazy. I have the exact kind of same analysis, well, almost take on the market, just not exactly the same. I'll try and show you what I mean by that though.
This move over here.
Sorry, I think I stopped your sharing. Sorry. You mind sharing again?
No, it's cool.
Over here. Oh, I think we got that retrace. Oh, we're so close to that. We're getting that retracement. Oh wow.
Or should I share again?
Yeah.
So this pattern, well, if it succeeds this level higher, then I'll tell you what this pattern is.
It's good reversal, isn't it? Hold on. I'll show you.
No, it's a market breaker.
Oh, okay.
It's called a market breaker. So basically, price comes like this, right? It forms a retracement level over here.
Yeah.
And it goes up. Okay?
Yeah.
It falls a retracement level over here. It goes up. So we're expecting a down move.
Oh.
But if price respects this level over here, but it pulls into a new direction, meaning it's not fulfilling its lows over here, then it's called a market breaker.
Okay.
Then that's another confirmation on expecting further continuation.
Oh, okay. So mine's a little bit different. So how I would have seen this and how I saw ICT say is basically it's like a reversal pattern almost, whereas obviously we're making high highs over here. But obviously there's a market shift over here saying, okay, now the people are bearish. However, we broke these highs, pulled back. I don't know if there's probably a fair value or a fair value gap around here in some time frame. And then we start to pull back up. So that's how I saw what's it called?
If you go to the
1 minute.
If you go to the 1 minute, here's your fair value.
No, there you go. So we started to rally from there. So that's how I saw ICT do it. I thought that's what you're gonna say, but fair enough. That's again another take on it, which is pretty good. Because I saw him, he said it again. It's market structure at the same time though. That's exactly how you would see market structure. Is obviously you need kind of that. It's almost looks like a head and shoulders to some extent. But how I use structure is completely different. It's not completely different, but kind of the same as yours. So I look at the market structure on a daily time frame and on the 4-hour time frame. And I always look for retracements. As you said, always look for retracements back into previous structure, because you said it always retraced into previous structure created, right? Or most of the time.
Yeah.
So for example, like this one, we have the high over here. We broke major structures over here of the high, so I'm anticipating a bit of a pullback back into these levels, into the down, up to the upside. And that's what I normally look for, and that's basically the basis of my strategy. And look at the 12-hour, obviously, then add these confluences.
Those relative equal highs that you circled, right?
Yeah.
If you draw your market structure on that relative, your previous high, then you can see you've already made a break of market structure with the imbalance.
Right here. So over here.
Exactly. So if you look at the gap with that big candle move, the candle on the left and the candle on the right, if you go into lower time frames, I bet you will catch a fair value gap in there. So meaning fair value gap hasn't been formed with that major. Is there a major wick? I can't see.
Which one? Sorry, let me hide everything because it is a little bit messy.
What are you watching now? What's the pair?
Gold. Let me hide this, and then you can have a free look at it. There you go. So if you're looking at maybe this is obviously the relative equal highs that I think you're talking about over here. Relative equal high. We had a break with imbalance over here, and obviously we have a fair value gap forming over here. You can technically say that we did retest it over here. which actually worked quite well over here.
So
this level.
if you feel like you took your entry too late, and if you go into the lower time frames on this candle that's currently busy, if it continues pushing with volume, then I would suggest looking at the next candle created to see if it keeps that gap. If that gap is kept, then you can start placing your positions to take further entries to the upside.
Okay.
So that current
okay.
candle where you are looking at right now, that very current candle, that one there, yeah, your first one.
This one?
So if you go into, yeah, that one. If you go into the lower time frame and you can identify a fair value gap, then you can okay, yes, let's look over here. So look at that fair value gap there on your left. It's small, but it's there. And you can see prices
here.
What time frame are you?
30.
30.
Again, higher time frame type. Fair value. I'm looking for fair value over here. I see one over here. I see one over here. There you go. And we had a major breaker structure. That makes sense. Okay, so hold on, no.
So yeah,
it's a bit weird, but yeah.
So what your entry, if you still want to catch your entry to the upside, your move would be is to let this current candle move up further to the upside with volume. And then if the next candle starts, right?
Yep.
And yeah, what my concern is that major wick. So if we break that level of wick in one move and we keep a gap between, yes, like a gap from that level and the next candle,
right,
then you can start positioning your
right
entries.
So if
then
it's
for sure you can, because I mean, bro, you've already broken market structure.
Yeah.
So basically you're gonna have another opportunity. If those rules are set, then you can start placing a position and taking the trade.
So kind of like the formation, it's kind of looking like this.
Exactly. Yeah.
Kind of like this. So,
we need that gap.
Yeah. And then there's a gap between this and this, and then that, and then.
Yeah.
Okay.
Yeah. So if you find your gap, then you want to start jumping into lower time frames such as your 5 or 3 or 2 minute, and then start placing your entries on that recent fair value gap, and then you take the trade.
Okay.
Because I mean, you already have a verification in market structure break, so it's okay for you to take a buy position.
Yeah. Oh, hold on. Where was my previous structure? So here's my analysis so far on gold, and I'll show you guys real quick, and maybe you see some similarity with the way we think and stuff. But obviously, so first of all, we look at for me, we look at weekly price action, what's going on. We're overall bullish on the with the weekly. Quite simply, it's very easy to see. Again, it's not something you teach; it's something you see. For me, anyways, for weekly and price action and the higher time frame. Again, same thing, just like bullish, just like on euro dollar, we're making high highs as well. But I mark my structure a little bit different from the average person. So for me, just because it looks like a swing low does not mean it's a swing low, or just because it looks like a swing high doesn't mean it's a swing high. For me, I need to wait for a 2 consecutive candle on the opposite direction. So what I mean by that, so this one right here, so from here to here, valid, because there's 2 consecutive candles that basically pulled back, and then we had the high, we broke the high over here. So now this is the new high, this is a higher high. And we did pull back, and did we pull back with 2 consecutive candles to the opposite direction? We did 1, 2, 3. So this is a valid pullback for me. Did we end up breaking this previous to this previous high? Yes, we did. So now this is the new structure for me. This is a new leg. This leg to this leg. Again, for this one, exactly the same thing. Now this is where it gets tricky for most people, and most people may see it as differently. We did break the highs over here, but we didn't actually pull back into 2 consecutive candles. So for me, currently, the current market leg for me would be this, where some people will probably be this leg right here. For me, it's this whole entire leg. And that's where, for me right now, as it stands, we're not bearish on the daily until we break this zone. So I'm only looking for buys at the moment. And look at the 12 hours. So 12 hours, it's not very important for market structure. I just look at volume as a whole, see if we're actually filling in value and stuff like that. But the volume's completely different. And then, so we go on the 4 hour now. Over here.
Mark,
Yes, yes, yes.
I see still same the start.
Oh, the Zoom call. I mean, sorry, the thing. I'll end the stream.